Hi everyone, so today I'm with Dom and we're going to be doing an earnings update from Micron for Q2 of 2026. Dom, whenever you're ready.
All right, can you see my screen?
Yeah, perfect.
All right, so Micron killed it. And I mean that in the most
Yeah.
literal but figurative way at the same time. Let's look at some of these numbers. Earnings per share, $12.20 adjusted versus $9.31 expected. Excellent. Revenue, 23.86 billion versus 20.07 billion expected. That's 3 billion more. That's crazy. Big numbers, big numbers. So I would say looking pretty good, but I do want to talk about some of the numbers. The article does mention that for the current period, the company does expect 33.5 billion in revenue, up from 9.3 billion a year ago, implying growth of over 200%. Adjusted gross earnings per share is at $19.15. Micron's led analysts polled by LSEG had expected $12.05 and adjusted earnings per share of 24.3 billion in revenue. Again, just doing really well. I forgot to mention previously as well that revenue in the second fiscal quarter increased from 8.05 billion a year from the year prior. Um, they do attribute a lot of this to AI. So it says right here that the step up in results and outlook or outcome are due to increase in memory demand driven by AI. Unsurprising, everybody's in the AI
Yeah.
bubble, AI field right now. Structural supply constraints and Micron's strong execution across the board. Basically, everyone's trying to get into that game. They do say that the stock has been up, unsurprisingly. Shares tripled in 2025 and have jumped another 62% year to date as of Wednesday's closing. Among the 10 most valuable U.S. tech companies, Micron is the only one that's up. Oracle is a leading decliner, down 22%. Microsoft and Tesla have also seen double-digit percentage drops. We've covered a couple of these companies recently, so that does check out. They do also mention that looking at how shares are trading going into the earnings report, they thought the biggest risk was high investor expectations, says Hende Susanto, a
Hmm.
portfolio manager at Gable Funds, in an email. Says, however, the fiscal third quarter guidance is strong and well above analysts and my own expectations. And then a couple more categories I wanted to go over. Okay. The company's GAAP gross margin, the profit left over for accounting for the cost of goods sold, more than doubled in the past year to 74.4%, up from 36.8% and
Wow.
increased from 56% in the prior quarter. Net income climbed to 13.8 billion or $12.07 per share from 1.58 billion or $1.41 per share in the same quarter of last year. And then Micron says revenue in its cloud memory business rose more than 160% to 7.75 billion. The mobile and client unit saw even steeper growth, with revenue jumping 7.71 billion from 2.24 years ago. So honestly, there's a couple other statistics they go over, but I felt like these were the more important ones. Really doing well right now.
Dom,
Honestly, a lot of the major metrics can't be beat.
Dom, what do
Honestly,
you?
it's
Yeah,
awesome.
Dom, I just wanted to add one more thing where you have it right there, perfect. Where it says their competitors Samsung and SK Hynix. SK Hynix is a
Oh
South
yes.
Korean company, and yeah, where exactly? Thank you. Where Dom just highlighted, but those companies. So just to clarify, because I did look it up before, they're a triopoly. So it's pretty much almost 33% for each company. So Micron versus Samsung versus SK Hynix essentially do the same thing. So just for people aware of like what their market share is, that's pretty much around what it is. It's around 33%. They have a triopoly with the two other companies.
Yeah, no, that's definitely something important to consider, especially because as we saw, with their revenue, earnings per share going up as well. I mean, killing it. I'm sure these guys are also doing pretty well in their own respective divisions since they
Yeah.
have a pretty similar market share.
Okay.
But yeah,
Perfect.
I would say overall excellent quarter, no complaints, and definitely one of their better ones.
Okay.
So let's go over to Matt and kind of go over more of their financials and see how they're doing currently.
All right. Thank you, Dom. I appreciate it.
Thank you.
Okay, so I actually first want to start off with where the stock is currently trading at because where Dom and I covered this company 3 months ago, it's pretty much doubled actually. And I don't know if Dom was even aware of it because I just checked our video before this one. And when we were looking at it, it was around December-ish. So it was like 220, 230. So it's 422 now. And I mean, again, there. earnings are remarkable, but look at this. Their 52-week low is $61. And their 52-week high is $471. So I would probably say, even though I do like the numbers, wait for a little bit of a dip. I mean, we're talking about a massive, massive amount difference between the 52-week low and current prices. So just be careful with that, that it could, stocks always do come down. So you do have to be a little bit careful of that. My recommendation. Now, Simply Wall Street's going to have that. Currently, it's 10 billion in free cash flow. The next 3 years is going to be 67 billion. So it's going to go up pretty much 6 or 7x from where it is now. And again, excellent. Nothing to complain about. The financial health of the company, we're going to take a look at. Really good as well. High equity. Finally, debt's getting lower. Cash is higher. Again, nothing to complain about. Looks really good here. When we take a look at my DCF is going to say 42% undervalued. I believe that's based off historical. When we check Wall Street, Wall Street's going to say it's 14% overvalued. I'd probably agree more with Wall Street. They've had such a massive rally, and to certainly be on the safer side as a possible shareholder, you should certainly wait for a more conservative price, especially for this one. Now, when we take a look at the net income of the company, I think Dom mentioned it here. So we have, where is it? Here it is. So we have 8.6 billion in 2022. Now it's 24 billion. So it went up 3x in, what is that? About like 3-4 years. Still incredible numbers. I mean, nothing to complain about. And lastly, Tipranks. Tipranks is going to say it's a strong buy. 25 buys, 2 holds, 26% upside. Last price was 422, like I said, low of 400, average of 536. So certainly I would wait. It's not worth the risk of just 26% potential upside on this one. I would certainly wait, because if it's a 52-week low of 61 bucks, I would definitely wait with this one. Dom, is there anything else you want to add? Dom?
Sorry about that. My mic is muted. I was drinking some water.
No.
But I just wanted to contribute that I agree. You know, it is pretty high at the point. I mean, it jumped a ton since the last quarterly report, just because obviously they did so well. So it's hard to want to get in at this exact time just because of the pricing. But
Yeah.
obviously the company is doing super well. So 100% still keep it on the watch list. It's just expensive at the time.
Yeah, exactly. All right. Thank you, Dom. Appreciate it. Thank you, everyone.
Thank you.